Hello, my name is Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. I'd like to go through some charts with you today, and I'd like to walk you through the first one, which is Eurodollar. Now here we have a key reversal down yesterday, which counters all the indecision and nascent bullishness seen earlier this week. I've said all along, and I quote, the market's getting a bit antsy hanging around the 111.20, 111 even support area and not trying to push down through it. End of quote. So eventually decided enough was enough of this hanging around and punched down through it and closed well below. Nothing's changed the idea put forward for a big head and shoulders top formed over 2017, 2018 that I've been carping on about for ages and ages and ages. This is the one with the target X in the 104.85 area. Next one I'd like to look at is cable, or AKA sterling against the US dollar. An indecisive spinning top yesterday with bearish tendencies, which have followed on today. However, please take a moment to look at the beauty and the elegance of the bearish 2019 Andrews pitchfork, those three lines that I have been going on about since May. The pattern is still intact, as despite the large drop this week, the lower time, currently 121.16, is still guiding the market lower in an orderly fashion each day. The test, as always, will be the market reaction to the tines when they come close. Below we have some significant support though, on a closing basis from the March 2017 low at 121.08 and the 2017 low overall at 119.77. The third chart I'd like to look at is euro against sterling. And here we have a bearish matching pattern and also a bearish long black Mariposa, which seems likely to have led to a pipe top. Interestingly, the pullback has also brought the market back within the tines of the broken bullish May to July Andrews pitchfork. The market is sitting between the upper tine, currently 91.47, and the middle tine, currently at 90.39. The fourth chart I'd like to look at is US dollar against the Japanese yen. Now here we have a bullish harami, yes, we have a fresh high, but just by one tick. Though, still, it negates the previous session's market trap of a bearish engulfing pattern. The market managed to close above those old favourites, the broken 2016 today uptrend, currently 108.72, and the 50-cent Fibonacci line of the 2019 move so far at 108.67. Today, we've smashed up through the significant overhead resistance of the 50% Fibonacci level of the 2016 move at 108.86, which has capped on a closing basis the market since late May. We've now moved up into fairly free territory until at least about 109.41, which is the middle tine of November 2017 to October 2018 shift pitchfork. However, may I draw your attention to the significant overhead resistance, currently between 109.54 and 109.63, which contains within the very recent 50-cent Fibonacci line at 109.58, as well as the medium moving average, currently 109.62. The last chart I'd like to look at is the Aussie dollar against the US dollar. A ninth bearish black crow yesterday as the market punched out below the small band of support, now resistance, which is between 6,900 and 68.60. It's not that big an area, but it had managed to slow the decline. We're now looking at the 2019 low at 68.29 and the nearby 2016 low at 68.24. Overall, we're still within the broken bearish shift pitchfork that's been running this market throughout this year. Now, a couple of points to remember. First off, this move down has been due entirely to the rejection 2 weeks ago of the overhead long moving average. That's currently at 70.82. Secondly, this broken shift pitchfork was on the verge of my retiring it because I thought it had finished. However, I've reprieved it because it seems to have an echo. So far, so good anyway. In the meantime, good trading.